Nancy, we saw an 8% swing before this swing, by the way, from this morning to this afternoon, not even including what's happening now. 8% swing because of an erroneous headline that suggested the tariffs may be paused for 3 months. How hard does that type of move make your job?
Well,
softball to open up the show.
It's hard. We don't trade on a daily basis necessarily, but
you mark the market probably. You're watching it go up and down every day.
That's right. And remember, the pushback we're hearing from the administration's proxies is that, oh, this is Wall Street having a temper tantrum. My clients are not Wall Street bigwigs. They are individuals who are built their, this is they've worked their whole career to build this asset. 100%. So I think this was the most reckless policy rollout I've ever seen. It isn't the art of the deal. I get it. He likes to scare the people he's negotiating with. But that chart that he held up, the futures were actually flat during the press conference, Liberation Day.
Yeah.
They were flat until he held up that chart with those ridiculous interpolated tariff numbers. And that's when the market really got concerned. And I think having Peter Navarro and Howard Lutnick, I'm sorry to say, as spokespeople has not helped bring clarity. Is that nice enough?
Yes.
Yeah.
That's fair. I mean, there were islands on that tariff chart that have more sheep than humans. Peter Mallouk, I'm not going to defend the tariffs. I'm not going to defend Trump. Okay, let's forget about the politics. Forget about the people in charge. I know it's hard, but let's try to do that. Okay. If I go back 5 years, pre-tariff, pre-COVID, the S&P 500 is up about 15% a year, every year since then, even with this recent decline, even with a 22% drawdown top to bottom in the year 2022. What kinds of lessons should longer and medium-term investors take away from now and what the market has done for the last 5 years?
I think everybody just needs to take a deep breath and zoom out. Now, what you hear online, I know you're seeing this too, on your feeds, is people, well, this is different. This is one person and he's lost his mind and we can't trust anything. And even the people that think he's completely rational, this is very different because the hands of one person. This is why horror movies are scary. They all have the exact same general theme. Okay, there's a bad guy, shows up, scares everybody, kills everybody. Now we killed him. Now he's back alive at the end. But we get scared because it's a little bit different circumstances every time. Yes, this is different than COVID, which was different than 9/11, which was different than the 08-09 crisis. But if we can just zoom out a little bit, if you are a young investor, this is a gift. If you're saving in your 401k, and by young, I mean working and contributing at all. You could be 70 years old. If you're adding, this is a gift. Keep your contributions. If you were hoarding cash, keep investing. If you're retired, this is why you have short-term bonds. You were wondering for the last 5 years, why the hell do I have these? This is why. You're going to be fine. Over 5 years, the market's positive about 95% of the time. Do you really believe that 10 years from now, it's going to cost less to go to Disney World? It's going to cost less to buy a meal at McDonald's? Give me a break. Everyone knows it's going to work itself out over time. It's probably going to be months or quarters, not a decade. But if you just zoom out a little bit, it's a lot easier to make the right decisions going through this.
It is. And Peter, I'm going to go back to you because I think you're making an important point. And let's be honest, because of who's involved, the passion, I'm going to use a nice word, Nancy, the passion is a lot higher. If you post when I post the market's up 90% in 4 years, people are going to crap on me because they're mad that I said anything that was relatively positive. I get it. But Peter, if you are, and retirees are like, I'm being wiped out, are you?
No.
If you're, Peter, you run the number one ranked wealth management or one of the top ranked wealth management firms in the world. If you're 80 years old and your financial advisor has put you 100% into stocks and you're getting wiped out now because you have no bonds, which, by the way, are up. If you have a half and half portfolio, you're probably flat, maybe even slightly higher. If you're 100% in stocks right now, you fire your financial advisor.
100%. I think there's two things. One, if you're really saying I'm down, I can't survive this, I'm 100% in stocks, well, you definitely have the wrong advisor. You should never, under any circumstances, be at the mercy of the market. not based on who's president, because stuff happens. No one predicted any of those bear markets. They're not on the bingo card coming in anybody's given year, whether it's COVID, 9/11, or whatever. Never put yourself at the mercy of the market. Also, never listen to anybody who tells you how to navigate this going in and out. I mean, today was a great example, just a rumor that there might be a pause to potentially have a discussion about the tariffs caused the market to soar. That tells you that no one's going to ring a bell. The market's going to move before anything happens.